Hello and welcome to Tax Matters. I'm Chamaka Ohauchi. When you are approached with a demand for the payment of any tax type, anyone, value-added tax, personal income tax, land charges, capital gains tax, education tax, do you have any cause to step back and question the powers of the person or authority making that demand of you? That is where jurisdictional and legislative powers come in. Professor Abiola Soni is an expert in taxation laws. He's a professor in the Department of Commercial and Industrial Law at the Faculty of Law, University of Lagos, and is a senior advocate of Nigeria to boot. Professor Soni presented a paper on jurisdictional and legislative powers on tax collection in Nigeria, pertinent considerations, at the interactive training conference held for justices of the Supreme Court and judges of the Court of Appeal, jointly organized by the FIRS and the NJI. We want to share with you on this episode what Professor Soni shared with the jurists. But before then, do you know that queries like the one we raised a few minutes ago can be answered by simply reaching out to the FIRS Contact Center? Take a listen.
In the past, the service had a help desk which served as a port of call for inquiries. However, it had its limitations, and management wanted a modern, innovative contact center that could be accessed easily from multiple platforms such as telephone calls, SMS, social media, and the FIRS website.
With the contact center in place, you don't have to come to the office. At the convenience of your offices or at home, you can reach us through via the telephone lines we have, through text messages, emails, or any of the social media handles.
Among other things, the FIRS Contact Center has a reporting platform providing executive summaries, frequently asked questions, and historical report.
Please, where they call us from?
Agents of the center can also respond to inquiries or complaints in 7 languages, namely Yoruba, Hausa, Igbo, English, Pidgin English, French, and Arabic. And more language capabilities will soon come online. Other capabilities of the contact center include easy access to contact details of subject matter experts who are specialists in their various fields, state coordinators and management staff by agents. The center can also handle mass mailing to taxpayers, and agents can easily route inquiries or complaints to subject matter experts, relevant departments, units, or tax offices capable of resolving taxpayers' complaints or inquiries.
The contact center also has the capability to route calls. So what that means is it can route calls depending on the agent that is free. It will route the calls. And then the contact center has the ability for conference call as well.
To ensure that the contact center agents function optimally, the supervisor and Servicom department can record and also listen in and hear conversations in real time. Furthermore, the executive chairman and top management have a dashboard which enables them to view the performance level of agents and subject matter experts.
Tax education at your palms and on your fingertips. Now to Professor Soni.
I'll be talking on a topic that is constitutional in nature, and it's on division of taxing power. Because constitutional law is a compulsory course, so any lawyer, even somebody in year 2, will have a good appreciation of what I'm going to talk about. But I would still try and simplify it. So we are going to focus on intergovernmental disputes relating to taxing powers and also the power to collect in the context of the original jurisdiction of the Supreme Court and also the jurisdiction of the Court of Appeal. So the objective of the presentation are, 1, to underscore the difference and the significance between taxing power and power to collect. They may look similar, but they have fundamental differences, which we will appreciate very soon. Then we will look at the constitutional framework for division of taxing power under the 1999 Constitution. Then we will highlight certain past, present, and emerging issues on these themes and sub-themes. Legislative power is the power of the legislative arm of government to make laws through statutes. And this is general, to make laws on any subject matter within the competence of the National Assembly, and in the case of the House of Assembly, within the scope of the states. It is constitutional in nature, because if the Constitution does not bestow or endow a level of government with legislative power, they can only do so in vain. So for this, we look at Section 4 of the 1999 Constitution. So there are instances where by the doctrine of constitutional supremacy, Section 1, subsection 3, laws made by a level of government have been declared null and void. So, against the background that legislative power is broader, is generic, we now come to taxing power. And of course, taxing power can only be a subset or an aspect of legislative power relating to exercise of power of taxation. So I define it as the power of a government to impose by its own law a compulsory monetary contribution on taxpayer without any direct benefit for the purpose of public finance. If you are eating in Transcorp Hilton, you are getting benefits as you pay. If you are taking Uber ride, you are getting benefit and pay. But if you are paying your tax, you are not getting anything directly in return. And you want to agree with me that the power of government to ask for contribution compulsorily in such circumstances must essentially be limited. Because people will have other plans with their money. They may want to spend it, they may want to save it for the next generation, they may want to gift the money to people of their choices and all that. So essentially, taxing power will be limited than legislative power.
Professor Sonny outlined the basic components of an average tax legislation.
I quickly look at power to collect taxes. It is the power of an agency of government that is important, to collect tax in furtherance of the provisions of the law imposing the said tax. A critical feature of any statutory, any taxing statute is what is taxed, who is taxed, how much is payable, in what circumstances, what are the reliefs, what are the offenses, what are the penalties, and most importantly in the context of this discourse, who is going to administer it? Is it FIRS? Is it state boards? Or is it the revenue committee of the, or is it a totally different body? Now, power to collect tax is an administrative, in nature. It is not constitutional. And there are procedures. I've won cases on the basis that certain administrative imperatives were not followed in demanding for tax. There was a negotiation, I think, with one of the state governments in the East, where the tax consultant had negotiated, had meetings, tax audit review committee, and then they got angry and then said, you must go and pay this money within 24 hours. And they came to court to argue and said, look, there is no law that says they cannot say so. And I said, no. In other countries, you have what they call AGJA, Administrative Procedure Law, that will govern how government agencies should behave. And we're able to win that case effortlessly and say, look, this is arbitrariness personified. If they write a letter to you, you must respond. So some of the administrative rules apply to tax authority. So the Constitution allows federal government to delegate the administration of 3 taxes to the states. And these taxes are personal income tax, capital gain tax, and stamp duties. It is on the basis of this that states now collect taxes in respect of their residents.
Professor Sonny illustrated this fact with an extant case.
So in the case of Eko Hotel Limited and AG Federation, the power to collect taxes came to the fore. And what Eko Hotel did was to say, look, I've been paying this tax before to the federal government, FIRS. Lagos State had come to impose a similar tax and served me with an assessment. And they went to Federal High Court in a manner that looked like interpleader summons and said, well, we are not arguing about our liability, but we are not going to pay the same tax or similar taxes to 2 different bodies. So you determine on the basis of the legislative framework, who do we pay to? And that was the case that went all the way. In fact, it was the case that killed the sales tax of Lagos State. Okay? Let's look at the appellate jurisdiction of the Supreme Court. Generally, before a matter comes to the Supreme Court, it would have gone through administrative review, tax appeal tribunal, or body of appeal commissioners. Then it would have gone to the High Court before it goes to the Court of Appeal and finally Supreme Court. In one of my writing about 20 years ago, I said somebody who wants to challenge a case through the entire judicial ladder must have what I call the spirit of a long-distance runner, because you would have spent a lot of money. In the cases that Justice Kanye mentioned, it was clear, and the Supreme Court said it, that they knew that Shell fought that case on principle in order to ensure that they brought certain things to the fore and then they get justice, quote. They get justice on them. Because this is the way they rationalize it. I also critiqued that case. I have an article on it where I adopted all the reasoning of Justice Kanye and said, look, you cannot look, you gave scholarship, fine, but you are not under compulsion to do it. It was a corporate social responsibility. There are some other reliefs for it, and I argued. But on reflection, when I now integrated with the industry and I have a better appreciation, and I said, look, if there are certain things that these people are doing, and government is the one asking them to do it, directly or indirectly, there is no reason in the world why you should say that they should not deduct this money. But in terms of the principle, the reasoning, how they brought accord and satisfaction and made a tax case look purely like a contract case, it will be open to attack on purely intellectual ground. Okay? But in terms of using taxation as instrument of social engineering, why not? Why not? And Justice Weiss, in a way, in that judgment, tried to save thousands of Nigerians or millions who are benefiting from the scholarship scheme. Because what they would have done is to stop it. There are people who have benefited from this scheme and who would have lost those opportunities.
Professor Sonny concluded this way.
Any decision of the Court of Appeal or the Supreme Court here will advance the cause of either the federalists or the anti-federalists. The federalists are defensive of state rights. And they are saying, if there are scope for cooperation, why not? And that is my position. But the anti-federalists are saying, no, centralization. So whichever way the pendulum tilts is going to actually impact one level of government in terms of accessing revenue to discharge its obligation.
Professor Sonny has declared his stand. Where do you stand? Are you a fiscal federalist or are you an advocate of centralization? Share your views with us on Twitter, on Facebook, on YouTube, by text or by calling.
It is an offense punishable by a fine of 10 million naira and or imprisonment for any agency of the federal government other than FIRS to demand for books or returns for the purposes of tax. It is also an offense to carry out the function of assessment, collection or enforcement of tax or pay any portion of tax revenue to any person or into any account other than the relevant accounts designated by the Constitution or relevant laws of the National Assembly. It pays to pay your tax. This message is brought to you by the Federal Inland Revenue Service, FIRS.
You are still on to Tax Matters. As we have said several times on this program, the Personal Income Tax Act is a federal law, but under which state of residence of the payer collects and keeps. Yes, you heard us right. If you live and work in Abakaliki, your pay as you earn or your direct assessment in the case of small business owners is paid to Ebonyi State Government. If you are in Duse, you pay to the Jigawa State Government. Mr. Matthew Bojumbola also spoke at the interactive training conference held for justices of the Supreme Court and judges of the Court of Appeal. The first part of his presentation had earlier been shared with you. After laying the foundation for the discourse, Mr. Bojumbola proceeded to touch on the core of his paper, taxation of non-residents.
If you are not a resident now, what do we tax? If you have a trade or business or vocation or profession in Nigeria, any income that comes your way in Nigeria from that activity will become taxable. If you are an employee and your employer is here and you are exercising the employment here, then even if you are not a resident, the employment income will become taxable in Nigeria. If you have these lines of income in Nigeria, irrespective of where you live, you earn dividend, royalty, interest, rents, fees, for example, director's fees and whatever. Whether or not you come to Nigeria, that income will become taxable in Nigeria.
With regard to corporate business entities,
now, when we now look at how do we tax income from business in the hand of a non-resident, there's a general rule in Section 3.1 of the income tax law, Peter, that says a non-resident individual will become liable to tax from the day he begins to do business in Nigeria. So whatever that business is, from the day you begin, so if you come in the middle of the year, that's when you are starting your business. From that day, you become taxable. And then, of course, where we have issues of what we call artificial transaction, and this usually happens between connected persons, a husband and a wife, a subsidiary of a group company, and all of that. And we needed to make adjustment because we consider the transaction artificial. Then in which case, the non-resident may be exposed to tax in respect of income earned from that artificial transaction. And then we have issues that has to do with fixed base. For you to be taxable for business, for transactions as a non-resident person, you must be considered to have a fixed base in Nigeria. That is, there must be a place we can identify that this is the place you are using for your business. And for example, let's look at the time we have sport events, maybe international sport event, and we have people coming from all over the country, all over the continent, Africa, or the world. And some of them decide to set up a small kiosk, and they are selling souvenirs of their country or whatever they are selling. That becomes the fixed base for that person. And that, for that reason, we can attribute the income to Nigeria, and then it becomes taxable. And then for a company that have a contract in Nigeria, and we have quite a number of them, They are not Nigerian entities. They don't have office in Nigeria, but they get contracts to do surveys, to do deliveries, to do installation, to do servicing, to do whatever be it. Then the income they earn from such activity is taxable in Nigeria. Or if it has a stock of goods, I mean, this company is not in Nigeria, it's not registered as a Nigerian entity, but has a place and they store goods from where deliveries are made to buyers. For example, let's assume Amazon has a warehouse in Nigeria where people who book and buy things from their website, they are supplied from. Then the income made from those supplies will become taxable in Nigeria. And then the last bit, which is part of the emerging issues that came, is that there's an adage in my language that you don't shave somebody's head in his absence because he has to put his head behind, under the barber's whatever. But today, technology has changed a lot of things. Now it is possible to deliver service without being physically present. And that is the whole essence of the digitalization of the economy of the world, and which has changed a whole parameter. And so this rule came to say, look, if you perform remote services, and that is section 6A of Peter, and we have something similar in section 13.2 of CETA. If you perform any service by remote, that is by not coming to Nigeria, but you are doing certain services, the income you earn is taxable. Now, for employment income from an individual who is not resident in Nigeria, the rules are very simple. If you exercise the activity of the employment in Nigeria, it doesn't matter whether it is for 1 day or it's for 2 days, the income becomes taxable. But if you do not exercise the activity of the employment in Nigeria, the rules is that the income will only be taxable if you spend up to 183 days in Nigeria, or if your employer has a fixed base in Nigeria, has an office in Nigeria, and then they charge your remuneration as an expense, as an allowable expense in Nigeria, then that income becomes taxable. Or if you are a seafarer, you are a Nigerian resident and you are a seafarer, then your income will become taxable in Nigeria, even though the employment activity is not exercised in Nigeria. Now, there are a few special provisions for employment that is very important that provide exceptions. For diplomats, diplomats are covered by the Vienna Convention that exempts the income earned by a diplomat as a diplomat from taxation in his country of posting. So, for example, a U.S. diplomat posted to Nigeria will not pay tax in Nigeria. He will pay tax in the U.S. Similarly, a Nigerian diplomat posted to Washington will not pay tax in the U.S., but will pay tax in Nigeria. That's a special rule. However, if the diplomat in Nigeria decides to have a property and collects rent, that is not a diplomatic income, and therefore it is chargeable to tax in Nigeria. For Nigerians who are working in embassies, not as diplomats, I mean, if you go to many of the embassies in Nigeria, you see some Nigerians there in one function or the other. They are not diplomats. Therefore, their income is taxable in Nigeria. Now, for Nigerians who are working in international organizations like the UN, the WHO, and whatever, then such income will be taxable in Nigeria if they go there as a diplomatic person. But if not, then the income is not taxable in Nigeria. One of the components of tax administration is the use of withholding taxes. In certain circumstances, the withholding taxes we collect, which ordinarily should be an advance payment of taxes, can become a final tax in the hand of a non-resident person. For example, a non-resident person who earns dividend is chargeable to withholding tax at 10%. Under the law, that 10% becomes the final tax. Same thing goes for rent, for royalty, and some services. Airline present a very different thing, and that is because there are two legs to airlines and shipping. They bring in goods, persons into Nigeria, and they take persons, goods, whatever out of Nigeria. The global practice is that what is brought into your country did not originate from your country, and therefore income arising from there, you cannot tax it. Whatever goes out of your country and people buy tickets, they pay for cargo, then that is arising from your country, it is taxable. That is the general guiding principle.
We hope you had fun with us again on this journey into the world of taxation, not only in Nigeria but beyond. That's our forte on Tax Matters. So tune in every week, same day of the week, same time of the day, and you will be richly enlightened. Bye for now.